And on the panel the panel will be run by Borys Pikalov. He has spoken, at our events in the past. Borys is just saying hi. He's going to cover a really cool topic. Borys has been a huge evangelist for the industry. He's widely followed on YouTube. I think when I last checked, he had over 1 million views across all the videos and all the content that he's put out there. I'll let him introduce, a couple of the panelists, and he's going to do a talk on investor relations in Web3, marketing, self-organization, and community. A little bit about Storebox. They are an award-winning tokenization company that provides both the tech and the consulting services to help clients figure out digital asset tokenization, right, and securities. So with that, I'll turn it over to Borys, and he'll bring up his panel, and we'll take it from there. This is going to be fun. Borys, over to you.
Tanvir, thank you for the introduction, and thank you for inviting me again. It's always a huge pleasure to be part of Token Expo, and I'm happy to speak here again. And today we're going to, with me, I'm having two panelists with whom we are going to discuss different aspects of investor acquisition and relations. Today joining me are Thomas Thomison, who is one of the pioneers in self-organization and making investors something bigger than just capital holders, but active participants of the business. And on the other hand is Jason Fishman, who is CEO of one of the most successful and prominent investment marketing agencies with over 500, if I'm not mistaken, successful fundraising campaigns across equity, crowdfunding, and various kinds of industries. So to open up the panel, I would like Tom and Jason for each of you to tell a few words about yourself.
Yeah, happy to. Thanks for inviting me. Super cool to hang out with you guys, exploring this territory. I love this territory. Started out as an entrepreneur. My name's Tom Thomison. I'm actually based kind of in the States, but I have been a full-on global digital nomad for a full decade, kind of well before it became super popular, and certainly well before pandemic pushed work from home everywhere. So I started out in the usual way with all the conventional things, but then I grew really frustrated with the status quo of how decisions get made and how organizations grow and engage their resources. And in about 2007, I got so frustrated that I was willing to give up my notions of what an organization was, with top-down management hierarchy, predict and control structures, and cross paths with a business partner, or a to-be business partner. And we launched a company in 2007 called Holacracy One. And Holacracy One pushed out into the world this practice called holacracy. You may or may not have heard about it, but it is a complete wholesale replacement for management hierarchy. And I mean every word. In a system that is fully self-organized with holacracy, there are no pyramids. There are no tops, there are no bottoms, there are no bosses, there are no CEOs, there are no investors that can wield control exclusively, and on it goes. It really changed the game, and it was a formal way to think about self-organization and decentralization back in the day, back in 2007. So I've been at this for quite a few years since. I've launched other companies that have brought me to engaging Storebox and Borys, who I love dearly. Rely on his expertise to help shape now 7 and 8 companies, working with a security token full-on under a Reg D offering, working with an equity token to rethink securities and venture capital, and then just getting ready to deploy a brand and utility token to envision the broader ecosystem value exchanges. And we rely on Storebox for a lot of support, consultancy, and source matter expertise in this area. So super happy to be here. I love the topic and anxious to explore.
Tom, thank you for the introduction. And Jason, now the word to you.
Thank you. Thank you, Borys. Host, it's a pleasure to be here with everybody today. My name is Jason Fishman. I run an agency here out of Los Angeles, California called DNA, Digital Niche Agency. We started as a growth marketing firm turned investor acquisition agency, as Borys mentioned, first through equity crowdfunding, laws that allow us to target investors with digital marketing and take them down marketing funnels. As Borys has mentioned, we've worked on over 500 of these deals that have collectively produced hundreds of millions in capital. Around 2017, we started getting inquiries for crowd sales around digital assets, and worked on some of the major campaigns late 2017, 2018, various types of security token offerings over the years, have worked with some of the top digital asset exchanges and fintech apps, as well as Web3 projects. Again, anywhere we're targeting investors, even Web3 users, and taking them down marketing funnels and measuring conversions. So I'm going to be able to speak to you further about what I see in the market on all sides of the table, investor, issuer, various types of supporting partners. I showcase a lot of our results as well on my podcast, Test, Optimize, Scale, episode 130 coming out, all with different guests as well here. I like to be an open book in terms of what we see working and not working across content marketing, advertising, and outreach tactics.
Thank you for the introduction, Jason. And now let's go into the meat of the panel. And I'd like to start with the basics. And basics of marketing is target audience. And I'm wondering to hear your opinion on who are the investors who purchase tokenized real-world assets. Some clients who come to me are the clients who say, we want to target crypto investors, our real estate offerings. Other clients say that they want to work with their existing investor base of more traditional investors, but give them more liquidity and new blockchain-based offerings. While some third kind of clients generally go to institutional investors and family offices, and we see this being popular with the current wave of tokenization. So there seems to be a lot of confusion regarding who are investors, who are primary buyers, who are interested in this kind of assets, with whom you see the marketing campaigns working the best.
Sure, I could hop in there. To begin, we A/B test, we variant test on every campaign. We have assumptions going in, but we need the data to show us what's working. To merely look at an initiative and say, hey, it's going to be the crypto investors, it's going to be the real estate, it's going to be traditional, it's going to be more of the family offices, you could have blinders, when really you need to cast somewhat of a wider net in an organized fashion and let the analytics show you what is working best. And we are often surprised. We'll enter a campaign thinking it's going to be the real estate investor, and then watching digital asset investors, cryptocurrency investors play a larger part in it. We've done an extensive amount of data mining to be able to upload for advertising targeting, to be able to leverage compliantly for outreach. And I think that A/B testing would be a big part of it. Also, there's a lot of similarities. I know a lot of cryptocurrency investors that also do participate in real estate. Could say that backwards as well. I've spoken at blockchain real estate events and have met a lot of investors with a deep portfolio of real estate holdings that definitely still buy cryptocurrency, particularly altcoins with high growth potential. We've seen family offices buy there as well too. So I also want to remove any stigma that each one of these is drastically different. I think looking at the media one consumes and being able to find what is relevant in terms of headlines, not just that week, but over the past year, and being able to create marketing messaging that reflects those headlines, you're going to get a certain engagement level of listening, and can then further that interest through a landing page, through an offering page, to various types of content marketing follow-ups. That's kind of my indicators. Is this something I would read about in the news? Is it new? Is it different? And gauging how the audience is going to respond from there.
This is such a good point, and I agree from my perspective as well, that often when clients first come to tokenization, they seek certainty, like we want to know this is how much this will cost, this is what kind of investor you will have, and this is what would be the cost per click. But the reality is we operate in such a dynamic and uncertain economy that expecting knowledge in advance is almost impossible. And that's why your philosophy of test, optimize, and scale, starting with small steps, is probably the most viable in this instance. Tom, is there anything that you'd like to add to that?
Yeah, I was just really appreciating Jason's focus on this area and bringing an analytical or data-driven approach to it. It's like, I need to talk to you more. Mine is more from not from that, but from an entrepreneurial standpoint of trying to optimize anecdotally based on what works. But following all the things that Jason just said, we started our first engagement with Stillbox around real estate and a fractionalized ownership of a portfolio of properties back before the last rounds of boom and bust. And the thinking at the time, and it was just going on market trends, press, general sentiment, was that there was a whole pool of investors who were fatigued with the risk associated with non-asset backed based tokens. And so the pitch or the story, the investor pitch, was to de-risk your digital asset portfolio with a asset-backed coin or token. Well, it was a nice pitch in 2019 and 20, not so much relevant in 2023. So I think the thing for us is to be prepared to, in the best sense of this, change the story to align with investor needs and make sure that the organization is equipped to provide investment vehicles that give investors either confidence, peace of mind, returns, classic kind of business sort of returns. It's about what is the investor story to attract a certain type or segment of investors. And we've had to shift that quite a bit over the last three or four years, just because of the changing market conditions. And I believe this is just a symptom of life on the edge. This is eyes wide open. This is exactly what we wanted to do, is to get these kind of experiences up front. As the market stabilizes down the road, still years in front of us, 2-3 years, we will have lived through these experiences and these different stories and the different investor sentiments at play to better position us when things come back online and begin to scale and grow. But it's kind of down to the fundamentals, really. And investors, as we all know, are crazy breed. They're herd animals or pack animals, and sentiment tends to drive the day.
This is definitely true, and we see that adding social proof and adding trust is one of the key issues. How can you show your investors that you already have someone backing you up, that you have early community, that you have early adopters or other people waiting for you? And that's where the power of not just speaking to each investor individually, but letting them engage with each other truly emerges. When you can create a community chat just in Telegram or WhatsApp or Discord with people who may not necessarily all be your investors, but at least some of them already invested in you and others are considerate or interested in your project. When you individuals are becoming interested, they can get feedback not only directly from you, but from dozens, or in best cases, 100,000 people who can refer you and recommend whether they have been happy with your communication, your investment so far. And this is what I like to a large extent about this highly open and engaged nature of Web3 and the kinds of campaigns we are doing. And on this topic, I'll be curious to get your opinion on what are other ways of creating trust. So we speak a lot about red flags, what you need to look at in order to, what investors need to look at to understand what investments are not worth their money. But what are green flags, and what green flags we can create in order to show investors that we are trustworthy and we would be good stewards of their capital?
People don't believe what they see on the internet. This topic of creating trust is key and shows up directly in the conversion rate. Digital allows for scale. You can have offline discussions. You could see private investors come from those discussions. It's a great thing, and you should not slow that activity down. Even look for ways to broaden it. And as part of that discussion, digital gets presented, where you can do wide scale email outreach, but to very specific audiences. You can use social platforms for outreach. You could use social platforms for advertising. And we do that often and have databases to be able to reach the right individuals with that targeting. And yes, if the messaging, if the offering page, if the materials all the way through do not showcase third-party validation, it begins to feel a bit like you've entered a brand's echo chamber where everyone's just talking about how great the brand is, when you really need to see press write-ups. Lead Investors was on a panel where I heard a great saying the other day: everyone wants to be first to be second. Meaning they see a big group investor come in, a large individual investor, the deal's validated. I'm going to speak more about this third-party validation in a second, but then they hop right in. Oh, great. And this has happened in the traditional, private equity, venture capital realm for years. I remember seeing some large celebrity investors sign on, and then the next day, 40 other investors would come on to a deal in San Francisco, Silicon Valley area. With digital, we can show that third-party validation, not just with press and lead investors, but users, depending on the vertical, customers, clients. The more times an individual hears the more information from the more sources, the more they believe it, especially if those sources are known to be credible by that individual. If they're already a follower of them, we'll feature logos. We'll feature photos, we'll feature quotes in advertisements, in outreach, on the offering page, on follow-ups. When we don't see a page converting high enough, we want to apply more social proof. And this doesn't happen accidentally. I don't want to say we have to manufacture it, but we definitely have to be strategic about how we put together a plan and determine who's posting what each day for more aggressive campaigns, each hour. On some of those shorter, larger runs. This is definitely the way you want to be approaching your campaign. If you can get hundreds, if you can get thousands of people to say positive things about the initiative, it makes a huge difference. I write for the Forbes Agency Council. If I have an article that's not linked, if it's not reposted, I may only get a few hundred views on the article. And on a top tier publication like Forbes, meanwhile, I have other articles that have been shared over 100 times, and from bloggers, top X, formerly Twitter users, and have over 40,000 views on those articles. It all comes down to that peer-to-peer marketing, in addition to that larger third-party validation trust factor when we look at conversion rates.
Yeah, once again, I love how you are kind of living in this space and talking about what maybe distills down to a sense of trust or intimacy, confidence, third-party endorsements certainly being one of them. Participation. So again, my business is about creating organizations that are structured differently, that are digital first, that are decentralized, and really pushing the boundaries of that. So it's to take what Jason said and then systematize it at scale so that transparency and visibility is not just something that we claim, but something that people experience legally, down to the operating agreement level about what an investor is and what their power and authority is in the system and is not. We differentiate things in a very crisp and clear way. And we expect investors to not throw their capital over the wall and expect somebody else to make it worth more. That is not the game. And I don't think that's going to be the Web3 decentralization game. I think with decentralization, distributing authority comes with accountability of participation. You can no longer stand back and just throw your money and then do the blame game. You must celebrate the wins and blame the losses. No, that is your money that you're investing in something. And the other thing that we anchor to is purpose. We don't invest in even charismatic leaders, although that is important, and good entrepreneurship. That is important too, no doubt. Those are table stakes. But the next investments are in purpose. How much do you trust this organizational system is going to be able to express this purpose into the world, the purpose that you care about? And then that starts to feed your trust in the organization and your sense of trust whether this organization will be a good steward of your capital. So it's telling some very traditional stories. These are not new things. These are old things, just repackaged in new Web3 or decentralized tool sets. So it's changing the notion what an investor is in my world. We decouple investment control from investment stake. So this is the thing that's happening in the DAO world that we also push against and help to mediate and mature up. We don't want investors wielding their power and authority with their capital. It's a really bad way to make decisions. I think most of us know that have lived in this space. It's much better to take the perspective of capital and integrate that with the perspective of labor and the perspective of operations to pursue this purpose that we care about. And no one gets to trump or outvote any one of those perspectives, but rather integrate those perspectives in a very fast and workable way forward in pursuit of that purpose that we care about. So that changes the nature, the flavor, the tenor of what an investor is in the system and how we expect them to participate. By participating, I think it does what Jason's pointing to. Not only do they just have to trust, they're involved in the posts. They're involved in the data. They have a voice. If they see something that is off or wrong or could be better or improved, they have a very clear pathway to use that sense that something could be different and process it in a way that they can see that meaningful difference be made. And so actually having feedback loops, right? Seeing something, saying something, and seeing something change, voice in the system leads to more trust, more transparency, and more visibility overall.
Jason and Tom, these are so rich answers that I have probably a dozen thoughts inspired by them, but I will probably voice only two ones that I like to share. One, on Jason's point about first investors, I just like to notice how easier it actually becomes to get a quasi-lead investor when we expand our idea of who investors can be and reduce investment barrier. Because now, instead of this being an angel investor putting in 100K or a VC fund putting, let's say, $500,000, now your lead investors can be your first customers who would refer you to your future investors, can be a few first friends or your former employers who would vouch for you and who would maybe be the first ones to give you, and not a huge money. They might each give you a few $100s, but this is already enough to kickstart on the very basic level a campaign. And even before you actually launch it, it will already give you some basic level of social proof. So by democratizing access to investors, we're also democratizing, reducing this entry barrier into getting the social proof. Second point to notice on what Tom mentioned is on how do we craft stories and how do we create this idea of trust, because it is true that, I notice this a lot in the VC world, that investors are currently seeking for a charismatic leader who would be able to disrupt entire industries. And this can be pretty problematic. We see that this actually incentivizes often bad behavior by founders. For example, on the example of WeWork, where Adam Neumann has been given billions in capital exactly because of his eccentric personality, which makes him that leader. And hence, when we raise capital, and some of that sentiment is still present in investors, and we still want to be charismatic, and charisma does definitely help you in raising capital. There is no doubt in that. But probably in order to be more ethical in terms of messaging that we do, we want to use other kind of messaging as well, not only about top leadership team as stewards of your capital, but also the purpose of behind the business and the capital as an alternative story. That is, you aren't giving this money to these charismatic leaders in order to earn you even more money. You're also invested in making the world a better place in some extent, in solving a problem and helping us become closer to your and ours ideal vision of utopia. And maybe now, instead of inspiring people by your personality, you will inspire them by the vision of what you want to do. And this doesn't necessarily have to be something super ambitious and lofty. It can be small and can be realistic, but it has to be emotionally vibrant in order to make people care. Because another point that has been mentioned here, differentiation is hard. you could tell an easier story 2-3 years ago that you are an asset-backed token, and this was already enough to make you different. But today there are already quite enough asset-backed tokens, and you need something more complex and more nuanced. And your purpose can be this more nuanced differentiators that makes you interesting and stand out across dozens of other private debt tokens or real estate tokens, etc. So this is something I would definitely encourage you to consider. And now we move on to, given the time constraint, probably last question. I'd like to discuss, to dig deeper on the topic of investor engagement. That is, what do you do with your investors, not only during the fundraising campaign, but also after? How do you make them an integral part of your business? How do you engage them in decision-making and your further marketing, maybe further campaigns? How do you turn just a few passive investors into actual community?
I can take a stab here just from a structure. We do it structurally. So there are a lot of ways, and I'm really curious how Jason's going to address this too. But in our self-organizing systems, back even with holacracy back in those days, we had to change the power structure, the way power was distributed or delegated, and the way we came together to make decisions about pursuit of that purpose thing. So way back in like 2006 and 7, as holacracy was being formed, we moved away from giving power to one class with privilege, right? So we don't do that. And I think this is a theme. I'm actually in Amsterdam at the Network State Conference, and folks like us on this call are beginning to imagine and envision these principles, these digital first principles being applied at social scale and economic scale beyond just businesses. And some of the fundamental building blocks are things that I've been working on for the last 15 years. And this is integrating perspectives of the necessary context to make good decisions. Notice I didn't say a person. I didn't say the big shareholder. I didn't say the CEO. I didn't even say a board. I said a set of perspectives from various contexts needed to make good decisions in pursuit of purpose. Investors are one of those contexts. And in our system, we have a clear pathway for investor voice to show up without wielding power to corrupt the system back to an egoic stance. So we decouple power from control. We decouple investment stake from control. Both are needed, different pathways. And by doing this, this invites participation. Back to Borys's question. Everybody gets an opportunity to surface perspectives needed to pursue this purpose that presumably they care about because they've just deployed some capital to pursue that. So they're incentivized to use their voice. And then through practice, they can see that they actually have it and that voice can be integrated to make incremental changes in pursuit of said purpose in terms of business structure, goals, strategies, all of it, right? So this unpacks into business operations. So the way we or I address this answer is systemically, structurally, down to the legal code. And I'll just put a point on it. In our for-purpose enterprise, you hear of public benefit corporations or B corporations or all types of variations of that. In our legal entity type, purpose is actually the fiduciary. We take the fiduciary away from profit, meaning that everyone is serving purpose, not the shareholder. And this changes the game completely.
And I want to applaud Thomas's response there. Completely agree and have seen this happen in projects we're involved with. Love that you brought up the DAO dynamic there. Just to add something else in terms of marketing and some of the capital raises that we work on, we found the actual users, the investors that have participated to be more valuable than the capital itself, in the sense that they continue to act as ambassadors of the brand, at least a percentage of that audience does. So that peer-to-peer marketing that occurs, we've seen additional rounds that they've participated in, social sharing all the way throughout the initiative, all the way throughout the campaign. And as Borys was mentioning, the messaging you can create the narrative that they're going to continue to share. And I love how Thomas mentioned the ongoing activity and participation of those users, given the infrastructure of the campaign, the differentiators from voice and control, ego. I mean, that's really set up for long-term success. I love that. But these individuals can be more important than any initial monetary transactions. This is your crowd, your audience, your user base that's going to continue to attract others to the platform. And I think that was some of the learnings that we had from campaigns years back, where it's beyond the initial raise, it's beyond the initial drop, and that continued usage is what's going to separate the industry leaders from projects that are here one day, gone the next.
Mhm. Well
These
said.
are such good points, and they resonate with my experience perfectly. At Starbucks, we do have a few community members, early investors who joined us back in 2019, 2020, who are still with us and who keep suggesting us on roadmap and marketing strategy items, who discuss what's happening in our community chat and thus reduce the workload of our support, who promote our messages on Twitter and thus increase our social reach, who keep buying other products and tokens we are issuing. And we actually, one of our early clients, I guess the second client who went with us for a turnkey STO solution. And just to let you know what we do, we help clients with tokenization from start to finish, guiding through all the stages of the process. And one of our early clients came to us from this broad community marketing. So we've seen very good ROI on community engagement, and this has definitely been worse. So, and probably to close this panel, I'm conscious of time and see we are already 3 minutes late, and thank you Tanvir for giving us a bit more time. Close this panel, and to summarize everything that has been said, I see that there is one common theme emerging, and this theme is a combination of flexibility and depth, because we cannot afford to make our marketing and our business shallow. We cannot afford just choose one broadly defined audience and go with them. We cannot use a simplistic generic narrative. If we want to succeed, we need to make our internal mental models and operation as complex as the world we are engaging with. And that world is complex. And that's why we need to reflect this complexity in terms of updated corporate and organizational structures, as Thomas suggesting, campaigns with multiple steps of experimentation and data-driven decisions, as Jason has suggested, and more complex narrative, as both participants suggested. So this probably is a common topic. If you want to succeed with investor acquisition and investor engagement in 2023 and beyond, that thoughtfulness, purpose, complexity, and experimentation are the way to go. And I hope this would be the message that you take. Feel free to reach out to any of the panelists. We would be happy to continue this conversation or anything else that we can do together. I'm very grateful for Tanvir for inviting us, and wish everybody a great time developing your business.
Actually, Borys, before we let the great panel, I wish we had more time, but before I let this distinguished panel exit or wrap the session, there's one question I wanted to ask. Now, a year or two before COVID, I was sitting in Palo Alto, a packed auditorium in a law firm, and a panel of VCs was saying that for the first time in their careers, they were feeling obsolete because so much of money is being raised by ICOs, right? And he said, 100 million, 150 million, etc. Will we ever see that level come back again, or at least, some of those good times? And just what are the thoughts, right? Like for the next 18 months, is the mood overall optimistic, or is it more realistic? We'd love to, we'd love to end with that from all three of you.
Thomas, Jason, your thoughts?
Yeah, I'm happy to jump in. I've been at this probably like everybody in this call back in the 2000 early teens, 10, 11, 12, and been through all the boom and busts. And they're brutal, man. They are brutal. There's no doubt. But I remain bullish on the immutable trend. I'll use the immutability word, immutable trend of decentralization. Kevin Kelly, the long futurist, long-term thinker, has a book around this. What can be decentralized shall be decentralized. We're just living it, right? This is the trend. This is back to the network state. We're already beginning to contemplate nation states being decentralized. We've already done it with city states and seasetting and everything. So the trend is not unstoppable. It's like the AI trend. Who knows where it's going to be and how fast, but it is moving in a direction. There's a trajectory. So I have no idea if it's 18 months or 5 years. I just know I want to be in the game. And by continuing to experiment and to dynamically steer and adapt and learn as I go, I'm in the game.
And just to add to that, I believe there's going to be more trust entering the market as there are more success stories, as the market picks up. We've seen it happen on various cycles. And when that occurs, I believe the crowd will be larger and will incorporate more mainstream audiences, that this could even become the new mainstream in years to come. And with less of a question mark around trust, and given all the factors that are going to be put in play, like Thomas mentioned, I think the need to have that comfortability is going to become less and less, because it's just going to be present based on the constructs of each of these ecosystems. So I definitely believe it will pick back up, and it tends to happen quickly, meaning even what we saw with BTC rising a few weeks back, seemed like overnight everyone started posting about it again. There was new rules. Hey, we're not going to buy Lamborghinis this time, or say WAGMI or things like that. I think there are the endemic audiences that are waiting for this. And I believe, more of the traditional markets follow what's working. So as the validity is there, as it's on more sustainable grounds, we will absolutely see it pick up, and it's even larger magnitude, in my opinion. Not to be bullish on it, it's a matter of when we'll be reflecting all of the technological components being in place, and the actual growth that's occurred since the last bull markets. But yes, I believe it will occur.
My opinion is as follows. In terms of total volume of funds put into Web3 ecosystem and specifically real world assets, we will definitely far exceed the amounts that have been done previously, because the market is still largely untapped. So it's just a matter of the right timing for the interest rate cycles and the sentiment cycles and supply chain cycles, for everything, for getting to the right moment in this cycle when another big huge bear market can happen. So in terms of because there is so from this perspective, I believe it's just a matter of time. One point, however, I believe we won't see or are less likely to see is the kind of environment where you can just put a website with a white paper written in ChatGPT and you will get millions in funding in a few weeks. This has been a weird time, and I believe we won't get back to it, and we don't need to get back to it because it's unhealthy. And higher competition between Web3 projects raising capital, higher quality of projects, and the need for more quality campaigns still be remaining points. So we definitely be at the times when there will be a lot of capital and good projects will be able to raise, but I don't believe we will get back to a point where raising will be easy for both good and bad projects. This, I believe, will be unlikely. And in terms of the role of VCs, I believe they will still remain relevant, but just in a different, but their place in the ecosystem will be different. They will have to co-invest with community, which they currently do not as often. They will have to adapt to more liquid markets when they don't have to wait until the IPO, until they have the possibility to sell part of their stake, or maybe they will even start to participate in earlier stages of the secondary market. And the funds themselves will probably become more decentralized in terms of their investor base, and maybe they will harness collective intelligence in order to make investment decisions. It's something that we're actually exploring on with Tom how we can create a private equity fund investing in purpose-oriented enterprises that would have hundreds or thousands of small investors and harness their collective intelligence like predictive markets and other advanced technique in order to make investment decisions. So this would be a different role of VCs, but we would still need, at the core, we would still need investment professionals who work full-time on finding great deals and helping the society to allocate capital. So this role will stay, but probably in a different way in the coming future.
Wonderful. Gentlemen, thank you so much for joining us for this panel. We really learned a lot. This was very informative, and we'll be in touch. Borys, I'll reach out to you in a few days. And once again, thank you for putting together this panel.
Thank you, everybody.
My best wishes.
Pleasure to participate. Thank you for having us.